Hi, this is CMA Swarupa and welcome to my channel. Our channel has a lot of resources for CMA students to help them prepare for their exam. So do check out our channel and subscribe to our channel for regular updates. Coming to today's video, we are taking up section A, that is the MCQ section of the question paper, the latest June 2024 CMA Inter Financial Accounting question paper. The first MCQ is about choosing the correct equation, okay, regarding owner's equity and your total asset outside liabilities. So in a balance sheet, if you see owner's equity, then there will be outside liability. Here that will become your total liability and this side will be your assets, right? So from balance sheet, we can take the correct answer, which is owner's equity plus outside liability is your total asset. Now the next question. Cash in hand account may have a debit balance, it may have a credit balance, both, any of the above. So the answer is debit balance. Cash in hand can always be a debit balance only. A bank account can have an overdraft facility, but I cannot overdraw more than what I am having in hand. So cash in hand will always show a debit balance. The third question, fundamental accounting assumptions are going concern, consistency, accrual, going concern, money measurement, prudence, going concern, business entity and accounting period, going concern, matching and consistency. So the answer is C. See, consistency is a consistency, prudence are all called as the accounting concepts, and because of which it will not be an assumption. It is not a fundamental accounting assumption. Choose the correct statement. Error of principle does not affect agreement of trial balance. Compensating errors affect the trial balance. One-sided error does not affect the trial balance, and the error of casting is an error of principle. So how to go about with this question? So first we will take compensating errors. Compensating errors will never affect your trial balance because they will always compensate each other and it will lead to agreement of trial balance. One-sided errors will always affect your trial balance. So here it is given does not affect. So that is also wrong. Casting errors are error of principle. Casting error means an error because of some mistakes in totaling or because of posting. So that is called as casting error. It is not an error of principle. So the answer is error of principle does not affect agreement of trial balance. Calculate sales from the following detail. What are the details that is given to us? We are given cost of goods sold. We are given opening stock, closing stock, direct expenses and your profit. Okay. So from this we are to calculate what is the sales. Sales, simply put, it is COGS plus profit is your sales. So here cost of goods sold is 30,000 plus 1,500 profit gives you 31,500. Mr. P issued checks worth 15,000 in March 2024, out of which 10,000 were only presented. While reconciling the bank and cash book, how much should be added as per cash book to arrive balance as per passbook? So we have issued 15,000. Okay, so in my cash account, in my books, I have reduced 15,000, but only 10,000 got cleared. So in my bank passbook, only 10,000 is reduced. Here I have reduced 15,000. So how much should I add it back to match with my bank? I need to add back 5,000. A second-hand car, that's the seventh question. A second-hand car is purchased for 2 lakh. Okay, the car is purchased for 2 lakh and there is an additional expenses, that is repair cost also incurred. So the initial, whatever is the initial cost that is incurred in acquiring an asset and putting it to use, that we will be capitalizing. So my capitalized value is 2,50,000. So for 2,50,000, we need to calculate depreciation 20 percentage for 2,50,000 for 2 years. Okay. So if I calculate, I'll get somewhere like 1,60,000 will be my written down value at the end of year 2. And what is the amount for which I have sold? I have sold it for 1 lakh. So what is the difference? There is a loss of 60,000. Now, X drew a bill of exchange on Y for 20,000 payable after 3 months. Okay, so the bill is drawn for 20,000 payable after 3 months. On the due date, Y could not make the payment and requested to renew a fresh bill for another 3 months at the interest rate of 12%. So you are asked to issue a fresh bill at 12% interest. So what will be the 12% interest? 12% interest will be for 3 months. So 20,000 into 12% interest for 3 by 12, because 12% is interest per annum. So for 3 by 12, if we add, it will be 600. So the answer will be 20,600. Fifth question is choose the odd one. So the odd one here is revaluation of unrecorded asset, because all the others are relating to goodwill. Operating lease is a revocable contract. State which of the statement is false. Salvage stock means stock that is saved, so the statement is correct. Unusual defective items are separate under an insurance claim. There is no separation, so this is the false statement. A, B, C are 3 partners who are sharing profit and loss in the ratio 3:2:1. Okay, B retires. So the gaining ratio of the remaining partner will be 3:1. Okay, because nothing is mentioned, it will be the same ratio of 3:1. Goods are transferred from Department X to Department Y at a price so as to include a profit of 33% on cost. So 18,000 is the closing stock. So what is the stock reserve? Stock reserve is nothing but the profit element, which is 33%. And it is 33% on cost. So the sale value will be 133.33. So this, if you solve this equation, you will get 4,500. Income statement of a charitable institution is also known as income and expenditure account. It is a quite easy one. Contingent liabilities would appear as a note to balance sheet. That's all for today. Stay tuned. In the next video, we will be solving section B of this same question paper. Thank you so much, and do like our video if you found it informative. Thank you.